Oh, good evening, everyone. Please, can you hear me? Good evening, please, can you hear me?
Good evening, yes, sir.
Mm.
Yes, sir.
Good evening, sir.
Good evening, sir.
Okay. Oh,
Good evening. Good evening, sir. Can you hear?
good evening. Thank you very much. Uh, welcome to class. Welcome to class. Thank you for joining. Uh, okay, let me make a few announcements before I get started. So, one of the things I'm going to say is this class is most likely going to be very, very short. Not like very, very short here, but I hope we end early. I hope we finish earlier because apparently not feeling too well and I might need to rest on time. So, in order to make the class a little faster, I will not do a general recap today. You guys know the way I lecture. I always like to do recaps of my last class before continuing with the previous class. That's what I use the first 30 minutes to do. But I might not be able to do that today because I need to really end the class on time so I can rest so that this does not get too much. So that is that for that. And apart from that, so what I just want to do today is I came up, I don't know if anyone has checked the question bank, but I added 3 extra questions to the questions in the question bank. So I added 3 extra questions. So what I want to do with the 3 extra questions is I want to solve any 2 for you today. I want to solve any 2 that you guys want me to solve. Any of the 3 questions, I'll solve any 2. Then the last one will be given to you guys as an assignment. Although I would still want to add, it was because there was no time. I wanted to add 1 or 2 more questions to it, but I'll still send 1 other question to the platform later, maybe Tuesday or Wednesday, depending on how my body is doing me. But before Tuesday or Wednesday, I'll send 1 more other question so that you guys can have 2 questions to go and solve to yourself. Me, I'll solve to you, people also solve to at home. So then in our next class is supposed to be a new topic. So what I will now do in our next class is I will now just do introduction to the new topic in just introduction. Then I'll also now do revision of this one. So, but the revision of this portfolio theory that I will do in the next class will be highly dependent on you guys. when I say highly dependent on you guys, it's because it would be based on the turnout of the assignment I see that would determine if I will do the revision. If I don't see enough turnout, if I don't see good turnout of the assignment, I will assume you guys do revision. But if I see at least a reasonable number of turnout of the assignment, I think I might now come in the next class and do a revision, then introduction to the next topic we'll be going to, because we are done with portfolio theory. After immediately I'm done solving these questions, we are done. So that is what I would, that is the method, or that is the way we're most likely going to investment appraisal, and that is a very important topic for you to know, and that will take us about say 3, 4, 5 weeks. So that's what I want to start next week by the grace of God. After investment appraisal, I think is only option pricing. I'm left with you by the grace of God for my own end, anyways. So what I'm saying is, today we'll just solve those 2 questions today. Then in my next class, I'll do a general recap of everything we've done on portfolio theory so far. And I will now do what now? I will now do introduction to the next topic. But if a lot of people do the assignment, I can, if I see a general mistake, I can correct some of the mistake, and I'll also what's the name now? I would also do. Oh, that's fine, yeah. What do you guys think? Do you think that's fine? Brana Zimio. Okay.
Yes.
Since I'm
It's fine, sir. Thank you.
welcome. Thank
It's
you very
fine, sir.
much. Thank you. So I think that's what we'll just do. Anyways, is there anything anybody wants to say? Is there any question based on maybe what we only solved one question last week now, so I don't think there should be any question. But is there anything anybody wants to? Is there anything anybody wants to say? Any opinion? So let me so I know when to, if I can. Is there anything? Please raise up your hand. Let me know if you want to tell me something. Is there anything you want to tell me? Is that observation? Anything? Mr. Benjamin.
Yeah, hello, sir. Can you hear me?
Loud and clear, sir.
Okay, yeah. Sorry about your health. We should quick recovery. Okay,
Thank
sir.
you.
With regards to the last question you solved, that one that has a very long formula. As in, I've been trying so hard to see how I can. Maybe I don't have to necessarily cram the formula just in case maybe the formula was not provided in the question. So is there a way is there a pattern we could follow to be able to write out that formula if a question like that comes out in the exam, and then know how to apply it?
First of all, I don't think there's actually a way to. There's no format. There's no pattern. The formula just looks long. If you calm down and look at it, I'm sure you'll find a pattern. Example, I'm saying this from my head, and it's been long. I've looked at it. So example is, you know that let me use portfolio. I know some of you will say it's because I've been doing it for a while, which is actually true. Anyways, learning curve was certain. Anyways, that's fine. But what I'm saying is, if you look at that portfolio risk, now that one that is very long. The first one is width squared x standard deviation squared x standard deviation x squared. You get plus width y. So it's the same thing you are doing for. So the only thing is you just need to know one box. Do you understand what I'm saying? You just need to know one box. So you know that what is in this box is the same thing as what is in the other box. It's just that x and y. It's x that is in the first one, there is y that is in the second one. Then plus 2, the same thing. This one just does not have square. Do you get? So I just feel like you just get to learn it yourself. It's not, it's not, there's no pattern. Let me answer your question. There's no pattern. On to cram the formula or anything, there's no pattern. I hope I've answered that. Michael Miriam, please, your question.
Good evening, sir. Um, quick recovery.
Good evening, Mo.
I sent you a question. I
Thank you.
think that was on Saturday or Friday, concerning a particular question that there was no weight given.
They
There
only
was
gave
no
the capital.
weight.
Yes, they only gave the capital, the current market price, but they did not give the weight of the portfolios. So I was asking you how to
Okay.
calculate the portfolio, the
I'm
weight of the
sure
portfolio.
based on some of the I'm sure based on some of the stories that the weight should have been provided.
You asked me to send the question
In
to
some
you,
of
which I did.
I've not really had time to look at it. That last week was actually, I mean, this week, that last week was actually very, last week's stroke weekend was actually very long. But I hope to have a little clearer week this week. So maybe I'll look at some of those questions anyways.
Okay,
So I'll
sir.
try to
Thank
get
you.
a look at it later.
All right, sir.
I hope. Oh yeah. Any other thing from anybody? So we are fine. Am I even recording this class? Okay, yes, I am. Okay, thank you guys very much. So, in order not to cause a whole lot of rousiness and all, so please let me just do like this. Please, if you have checked, let me share my screen and open. Do I even have the materials? If oh god, oh god, oh god. Okay, there are also some things I also want to address. I know some people here are also. I know some people here are actually angry with me for some things. I know some people have texted me saying I should send some of. Please, these things are not easy. That I should send some of all the materials I've sent. I don't have them in one place, and I don't have them on my phone. I don't have these materials on my phone. I most likely have them on my system. Whenever I'm on my system, to start sending them through, I don't connect my WhatsApp to my system. Start sending them through mails. All of them is another different thing. But the thing is, there's somebody that is unmuted. Though, please check your mic if you are the one in case. Uh, Chikwemeka. Okay, thank you. So as I was saying, I said, although I always try to, I like this is where we always do. When we get to mid diet, we will send all we send the mid diet, and at the end of the diet, we send all the materials again at the mid diet and at the end of the diet. But if I send it now, I will not send at the mid diet. I will not. It's not particularly easy on me. But mid diet, when we get to say March, mid March, we send all the materials reviews. We send them again for people that missed or people that joined late. So we send all the materials again. Then by so that one I would have used about 2-3 weeks. I've used about 2-3 weeks to compile them inside one folder. So I know that everything I'm just sending everything boom once out, either through mail or through any mode. I'll just send everything once. But for me to be sending it now, not sending me send it, it's not particularly easy. But I know some people are having that challenge because I'm sure 1 or 2 people have texted me concerning it, and I'm very sorry. I just have no way of actually helping you now. And I think I made suggestions to some people. You can just randomly text people on the group chat. Say, oh, it's just a manner of approach. Yeah, my name is this. I texted you from this platform. Please, did you join the class earlier? Did you have all the material? Can you help me check for all the materials? If yes, please send. If you don't have, thank you very much for your time. Not that hard. So you can do that if you really need to read them. If you cannot wait till midnight, you can just text 1 or 2 people randomly or 3 people random. Before you text first 5, I'm sure you see somebody that has joined the group chat since. So, like, okay, what I wanted to do, because me, I can solve. If you leave this thing to me, I will solve the easiest 2 questions, and I will go and sleep. That's the one I even want to do, Seth. So, what I want to ask is, if you are sure that you have actually thoroughly checked these questions in these question banks, if you are sure you have thoroughly checked these questions, please just raise up your hand. If you are sure you have checked the questions, oh, if you are sure you have checked the questions, please raise up your hand. Good. Thank God we are not plenty. I think we are just about 5, which is very good. Now, I like this number. It's okay. Oh, you would not raise up your hand. But when I say about 5, now that time I know saying I won't raise up your hand. So now, not to waste our time, please. I don't want to route the class today. Please, my head is banging. So I'll just call you one back. Just tell me the numbers you want me to solve. So that I will not pick any 2 questions that is not favorable solvable for you guys. That's why I'm trying to do this. Because me, I know the one that is in my mind. I'll just pick simple one and I will go. But just so please, Miss Choma, which one do you think I should solve? Real quick, please. Let's be very, very fast.
Number
Miss
one,
Choma, yeah.
sir. Number 1 and 2, sir.
You've done one in class now.
No,
I
sir.
was not around that day.
Madam, I cannot do it again. Oh.
No
Please pick
problem.
another number.
What of 2 and 3?
Uh-huh.
It's not possible now.
Two and three. Thank you, man. Thank you.
2 and 3, sir.
Okay, 2 and 3 too. Okay. Miss Miriam, which one do you think?
So number 2 and 4.
2 and 4. So I have 2 constant now. Okay, Miss Lizzie. We are Lizzie Ape. Please talk to me. Okay, Linda Adams, please, what do you think? 2, 3, 2,
Sir,
4.
please 2 and 3.
2 and 3.
Sir, 2 and 4, sir.
2 and 4. Anthony, please, what do you think? Anthony, okay.
Sir, number 4, only number 4, sir.
Actually, you even want only number 4. Hey, how about Joshua? Mr. Albert, what do you think? Oh yeah. Sumi Kiton, please, what do you think? How many do you think we should solve?
3 and 4. 3 and 4.
3 and 4. Okay. Sumi Kiton, what do you think? So about 4. I think fun.
No, number 3, because I've actually solved the rest. Just the
So I said just number 3.
rest are saying other parts. For number 3.
Okay. So thank you all very much. You can mute your mics now. So I think I got a lot of number 2, number 3, number 4. There's one person that will give us our finance. Mr. Isaiah, where are you? That man that used to laugh in my, where is he? Can you hear me?
Yes, I'm here, sir.
Good. Number, what do you think we should solve, sir?
Actually, I haven't gone through the questions, I will not lie, but then I think 2 and 4 is okay.
Yes.
Yes, sir.
Okay. Let me even me, I've forgotten the arrangement of these questions. Let me check them first so I'll know the ones. Am I sharing my screen? So let me run through them myself. Let me see the ones that, although I know at the back of my mind that I want to solve question 4. Now I told you I already know the one I want to solve. Because question 4 is particularly a little different from the ones we've done, and I want to explain some certain things there. So let me check question 4 again if I'm not saying rubbish. Okay, so I would want to solve question 4. Yes, I want to solve question 4 because it's particularly a little different from the normal long calculations that you guys are used to. So I would want to solve this particular question. Then, which other one should I add to it? This question 3, honestly, question 3 is not hard. It's not different from what we've done, but it's just little adjustments in some places that I will just explain. But believe me, it's not different. So and it's plenty. So I would really want you guys to go and lay your hands on it. Question 2 is not plenty because I'll finish question 2 in 10 minutes. Question 2 is just 2 questions now. No, it's just 2 questions. That one is not plenty. So I would finish question 2 in 10 minutes. But this question 3 is a lot because you need to do all those things that we did in our first class. People that were there. We did expected return. You did variance. You did standard deviation. You did for each of the security. I gave you there's formula for covariance in your material. You do correlation coefficient. The only one that you guys might skip and you might not know, I think it should be this. Most likely this C, but you can try. But I'm sure most of you can skip this C. But the rest are still the same thing using general formula. Mean return of the security portfolio. That is, you guys know the formula for return, that long formula for return. Then the other one is long formula for risk. Low term correlation. But I will touch some of the things you might need to do there later. But I really want to do question 4 and question 2. So I'm very sorry if I did not pick the question you selected, but that question 2 is a little easier. But this question 3 is wider. So I would want you guys to actually lay your hands on them and see what you have. So that's that's my first assignment. Number 3, the second one will come very, very soon. So yeah, let's solve. So where's my material notes? That's another problem that I used to have with people in this class. I think I use save them like this. Solution to portfolio theory question bank. Okay, I think see it here. Okay, I think this is it. So this is what I'm saying. It's not particularly different from this number 1 that we did. So you can just even come and use this method to do. So let me start from question. Let me start from question 2. Yeah, let me start from question 2. So please, somebody with question 2 for me. Thank you. Okay, question 2 now. You want to read question 2 for me? Read question 2 now. John's be reading question again.
Will has the following portfolio of shares in 5 listed companies in Nigeria. The figures are assumed correct. At present, the risk-free rate of return is 8%, while the market return is 14%. You are required to calculate the beta factor and the required return on the portfolio.
Thank you very much. First of all, let me give you one expo. If you guys are for people that use left hand, use it to put it on your left hand. So for people that use left hand, put it on your right hand. For people that use right hand, put it on your left hand. Don't use it to eat. That's the cocoa. For people that eat with the 2 hand, I don't know, maybe you should put it on your leg. Don't use it to eat. That's what I'm trying to say. Whenever you see, calculate the beta. Are you listening to me? Whenever you see calculate beta and you have different securities, there's something that should be coming to your head. What should be coming to your head is you are going to be doing the total market, you'll be doing total weight over total market value. So you will do total weight over total market value whenever you have to calculate beta of the entire portfolio. It's different though. For them to say, entire portfolio is different from what's the name now? It's different from oh Jesus. Entire portfolio is different from each security. Each security example now is saying shares. That's one security. Say, but you can calculate better of each of them. If you want to calculate better of each of them, mostly we use CAPM. Please let me ask my student, please, what's the formula for CAPM? Or what's even the full meaning for CAPM?
Capital asset market pricing.
Lie.
Capital asset pricing
model. Capital asset price model. Yeah.
Thank you. Please, what's the formula?
KE is equals to RF plus P1 brackets RF minus RM.
RM minus RM.
Can you come again?
KE
is equals to RF.
Hold on, please. Mr. Ifena, please come again, please.
KE is equals to RF plus P1 or beta equity in brackets open RF minus RM bracket close.
Okay, so your RF is what? Your risk free. Your RM is your market return. The two of them can also be called your market premium, Abi?
Yes.
Yeah.
Thank you very much. So now let's continue. So what I'm saying is, now in situations where you're asked to calculate the beta of the whole portfolio, please always make sure that you're going to the total weight of each of the security. That's what I don't know if you guys could remember what we did with when we were doing bond. When we were asked to calculate duration of the entire bond, we were doing it. We did also market value of it. So usually in SFM, when you're asked to calculate, maybe like something is each, and ask calculate maybe something. I'm not saying it's not necessarily not better, not necessarily better, but maybe you calculate something for the whole unit or for the whole portfolio. Mostly what you do is you calculate the weight and you calculate the total market value. So you divide the weight by the market value. Mostly that is what you do. But in some situations, the only thing in some situations, it might not just be market value. You get in some situations, it might not just be market value, but you shall divide the total weight divided by the market value. That is it for the total portfolio. But if you are asked to calculate beta for each of the securities, mostly what you are supposed to use is CAPM. Whoa. You're supposed to calculate better for each of them. Mostly what you use is CAPM. If you're supposed to calculate better for the entire portfolio, please don't use it to it. Just first thing that should come to your head is I'm doing my total weight divided by my what? By my total market value. So first you say calculating beta factor. Please let me choose my students that will call figures for me. I don't want a crowded class today. Please, if your hand is up, you can please help me put it down. Assured ways. Are you with calculator and the material, please?
I'm not with calculator.
Okay. But what's your plan? You better be bringing calculator to my class. So you want somebody to be calling figure for us? If it's calling figure for us and it's gone.
I borrowed some calculators.
When the exam is tomorrow, better than collect it back, madam. But they press that one that you don't know there. Please collect it. If you are with calculator and the material, please, Miss Lizzie, are you with calculator and the material? Chika Chuku, you are with calculator and the material, yeah?
Yes, sir.
Okay, so
I'm not with calculator.
What? Don't worry. So Grace, you are with calculator and material, yeah?
Yes, sir.
Okay, so Miss Grace, I'm sorry, I will use Miss Grace and Chika Chukwemeka. So the two of you will call figures and calculated kidney for me, please. And please, when you are done, please just help me with the mic and all. Thank you. But yeah, so let's start. So calculating beta factor. So the first thing you do with calculate, let's first bring out. So let's bring out some of our variables first. So let me do a table. So let me say I have about I have companies, I have shares, market value per share, market value better. That's about 6. Let me first do 6 per. Let me do 6 per. Let me do 6 by 4 first. I'll increase it later. So you say companies. Abi, you now say shares. What else do we have in that heading? Let's say want to get see these headings. It's not just a format. Do you understand? It's not as if it's just a format, but it's because of what I need. Don't forget that the formula is what? Total weight over total market value. And so the first thing I need is my total market value, because it is until I multiply my market value by the individual beta before I can get what? Before I can get the weight. So that means I need the total market value. And for me to get total market value is your total number of shares multiplied by your market value per share. Are you meeting me or you are not meeting me? What I'm saying is the formula is weight over market value. What I'm now letting you know is that you see these headings I'm writing, I'm not just creating them for my head. It's based on what I'm trying to do. I'm trying to get the market value of shares. How do I get market value? If they say for you to get market value of something, you need your number of shares multiplied by what? Multiplied by market value per share. Multiplied by the market value per share. So this is what you need to determine your what? To determine your market, to determine your market value. Abi? So the company, so you bring out the shares. So what are the names of the companies? Yeah, what are my people that I give
We
work?
have Samsung, Apple.
We have Samsung.
We have Apple.
Mm-hmm.
We have Techno.
So hold on, let me add one more, please. So this Techno, Abi?
Yes, sir. Itel.
Techno, Itel. What was the last one?
Nokia.
What's the number of shares for Samsung?
15,000.
15,000.
18,000 for Apple.
18,000.
10,000 for Techno.
10,000.
12,000 for itel. 12,000 for itel. And then 20,000 for Nokia.
20,000 for Nokia. So the next thing that you need, I told you we have a number of shares, so we need our market value per share. So you say market value per share. This one is in Naira term. So you come here and say now. So what's my market value per share?
For Samsung is 2 naira 50
What's my
kobo.
market value per share? I didn't get that.
For Samsung is 2 naira 50 kobo.
0.50 for Apple.
2.20.
2.20.
For Techno. Yeah.
1.90.
1.90.
1.50 for itel.
1.50.
And 0.60 for Nokia.
0.60. So you need your market value per share now. So you do your market value per share. So if you want to get your market value per share, you do your number of shares multiplied by the market value per share.
For Samsung is 37,500.
So you now market value now. So just do your total market value now. A share. 37,000.
500.
500 for Apple.
39,600.
9,600.
9,600. Somebody can start from down. Somebody can start from Nokia. I'm active. Don't worry. Just call figure for me.
18,000 for itel.
10,000 for itel.
12,000 for Nokia.
12,000 for Nokia.
19,000 for Techno.
19,000. Somebody cross check this app. Is it 38 or 39? 2 times
It's
8.
39.
39.
37.5.
7.5.
You don't
Okay, for
start.
Apple. Okay, sorry.
So the next one now is better.
7,500.
I'm going to copy one of our beta sims. I've used beta since we started this class. Where I won't go and see, but me, I'll write B. People you understand. Let me see if I have.
I understand.
Better, yeah. Okay. I have better. Don't worry. I have better in my symbol. Okay. So now, what's the better for each of them? Oh, yeah, is in the question now.
1.32.
0.32.
1.20.
1.20. Yeah.
0.80. 1.05. 0.80.
0.80. So the next now is our weight. So your weight now. So your weight is your market value multiplied by your beta. Are we together? So you now see your market value multiplied by copy this multiplied by beta. Okay. So yeah, 37.5 multiplied by 1.32.
49,500. Apple is 47,000.
The first one is 49,500, I mean.
49,500, yes.
Apple is what?
The second one, 47,520.
47,520. Yeah.
15,200 next.
15,200.
18,900.
18,900.
96, the last one, sir.
9,600. Let me add one more table. So you now see. So you say the total market value here. So this is what's total market value, what's total weight. And come here and now see your beta equals. Tell me when you get it to. Let me just let me know. Cost. Oh yeah.
Weight is 140,720.
140.
720.
What's market value?
126,100.
Correct.
126,100. So our beta now equals what?
5.17.
5 points.
Sorry, we can't see your screen.
1.12.
Reason you cannot see.
1.12.
You cannot see my screen. I think it's your network. Or is there anybody else that cannot see my screen? Is there anybody else that cannot see my screen? Please speak up.
No, sir, we can see it. Yes,
So I think
I can see your
Yeah,
screen.
I can see your screen.
so. I think if you cannot see the screen, I think it's most likely your network. So you can try to log out and log in again. But I'm sharing my screen and it's kind of visible. So let's go back to what we're doing. So our beta is 1.12. So let me give you another expo. Yes, I am, sir. I am. Thank you. So, like I was saying, there are another expo I want to give you is, you see the way SFM is very, very sweet. There are some figures you will get deep down in your mind, you will know you are wrong. Yes, now nobody needs to tell you. You will just know. There are some things you will press in. That's if you have solved questions to some point. You have seen the pattern of those answers. Or those, like I said, there's no pattern to it, but you would have seen the way this thing moves. If you have solved any question and your beta is 3 points, bring it to me. I don't think there's any question like that. Now your beta will be like 3 point or 4 point. So if you solved anything, your answer is giving you 4 points. First, go and know that you have gotten there's a problem. Or you solve, you are getting Canada, you are getting UK as your answer, or you are getting minus. First, know that there is a problem somewhere. So, but if your answer is within 1 point, 0 points, usually your beta is not most likely not greater than 2. Usually, even if it's not greater than 2, it's not usually greater than 3. You get? So because I saw somebody calling 4 points, you can never get such answer. That's my point. So now this is our beta of the portfolio. I beg, what's the second answer? I mean, what's the second question?
Second question is the required rate on the portfolio, sir.
The required rate, the required return.
The required return on the portfolio, sorry, please.
The required return on the portfolio. Good. Now, this required return. Best way to calculate required return usually is using your CAPM formula, which is your cost of equity formula, your CAPM formula. That's the best way to actually determine required return. Let me explain something to you. This is also for people that use left hand to eat. If you use left hand to eat, put it in your left. If you use right hand, don't put it in the hand that you used to. That's what I'm trying to explain to you. Now, there's something I want to explain to you, which is the difference between, we have what we call listen, if you want to jot, you can jot. We have what we call expected return, and we have what we call required return. We have what we call expected return. We have what we call required return. You see expected return here? Expected return is basically, how would I say it? It's like a return that is being anticipated by an investor, like the name implies, based on this company's historical performance. This should be my return. It does not necessarily mean that is the person's return. Oh. So you've checked Dangote's profit or loss. You've seen the profits they make. You know the number of shares you have. You know the amount you're supposed to collect from. So based on historical performance, you now say, okay, if I invest in this stock or if I invest in this real estate, normally this should be my expected return. This should be my anticipated return. You see that thing I just explained? It is different from required return. Required return basically is just the minimum return that an investor demands. It is the minimum return that an investor demands for his investment, just to compensate for the risk of investing. I said it is the minimum return that an investor wants from his investment. The difference is, for expected return, you have not even put money there. Are you with me? For expected return, you have not invested. You are just anticipating that particular return. But for required return, you have invested. That is your minimum return that is supposed to come to you. Then there are some things that expected return greater than required return. But when I get to question 4, I will explain that better, because we have what we call no puru and all of those. When I get to question 4, as I want to take that question, I will explain expected and required return better. But for this question, whenever you see calculate required return, please, first thing that should come to your mind is CAPM. Are you guys with me? Whenever you see calculate required return, what should be in your mind is what is CAPM. What should be in your mind is CAPM. Whenever they want to, all the ones you've been doing, you see all these ones that are up here. Can you see? Is expected return. Whenever you have to calculate expected return, you'll be given probability. Why I'm saying you'll be given probability from the past period. Say, okay, you want to make, if you don't make 1,000, there is 30% probability you make 1,000. There's 40% probability you make 2,000. There is 30% probability that you make what? That you make 3,000. So what I'm saying is, whenever you are supposed to calculate expected return, there will be probability attached. Because if you follow the definition of expected return I just explained, it is an anticipated return. You don't have it yet, so there needs to be probability attached. But whenever you're asked to calculate required return, please, first thing that should always come to your mind, capital asset pricing model. You don't have any other thing. Just go and do it. You've calculated your beta, put it in that formula and move on. Is there anybody that does not understand what I just said? Please raise up your hand if you don't understand what I just said. Please raise up your hand if you don't understand what I just explained. Please raise up your hand, just raise up your hand, so. Okay. Before I ask what you don't understand, let me explain again. Before I ask what you don't understand, though, I'll explain again. If you don't understand the second time, I don't know, but let me explain again. Now, what I said is I first gave you differences between expected return and required return. I told you that, let's use me and you as an example. No, the way you are now, somebody comes to meet you and say, Oga, see, you get this particular land. That government, I don't know, there's this particular land in my village, and people are already moving there now. Come and buy that land and use it to build real estate. Do you get? Come and use that land to buy, come and use that land to build real estate. Then, because you have the money, you decided that, okay, this real estate might actually be a good investment for me, might be a good security for me. Now, before you even put your money at all, you now check real estate within the area or within the serene, within the environment. You now check the real estate there, you check their historical performance. Then deep down in your mind, you say, or more. So if I build houses finish here, that means I can get about 20% return on my capital. Lando, but you in your mind, you're already like, I'm supposed to get 20% return on my investment if I invest in this thing. What you've just done, that is expected return. Do you get? That is expected return. You see that thing you have done that I'm supposed to get 20%. There is a probability attached to it. The probability attached to it is okay. There is 30% probability or 30% chance that you might not make, you can make more than that, or you make below that. The last 30% probability that you can make more than that, you can make more, or you can make below that. So what I'm saying is, for expected return, because you have not actually invested in the business, there will always be probability attached to it. Now the next one is the required return, and after that, whenever you tell you to calculate required return, first thing that should come to your mind is CAPM. Why? Because required return means that you have put your money there. It's just the minimum return that you're charging. Usually your cost of equity. You know, cost of equity is like the cost of the percentage of your equity now. It's like your rate of return. So usually your cost of equity. So that is what is saying that, okay, whenever you're supposed to calculate your what's now? Your required return, it should always be your what? Use your CAPM formula, use it to determine your cost of equity. That is basically what it's saying. But in situations where you're expected to calculate the expected return, that example that we did, that first one that we did in example 1, that is what you will do. And I just showed you now. See it here. See your expected return. We multiplied the return that the person wants to get by the probability. Then the sum of everything together is your expected return. So what I'm saying is, this probability attached to making, you know, you said, okay, you can make 20%, you can make 30%, you can make 40%. Multiplied by that probability is your expected return. Based on this probability, addition of all of them together is your total expected return. Which is this figure here, is your expected return, which is different from your required return. I hope it's a little clear now. So if you still don't understand, raise up your hand. That's I don't want to stress. You should better buy me Montana and make after this class. If you don't still understand what I've said, raise up your hand. Ayuba Amos, please, why don't you understand what I said? Your time has gone. Ayuba Amos. Okay. Iburo Harrison, what don't you understand what I said? Iburo Harrison, what don't you
Sorry,
understand?
sir. I forgot that I did not bring down my hand.
Okay. So, Mr. Ayuba Amos, I can hear you.
Yes, sir. I said from your explanation now, I'm able to get the difference between the requirement for
Thank you very much. Thank you very much, sir. Ashodi, you wanted to tell me something?
No, I wanted you to go ahead.
Thank you very much. So let's calculate our number 2. So now, like I said, the required rate of, so we'll just go and do our CAPM, JJ, easy peasy. So you come here, so you say B. Please always do your work like this. So when you are moving to a new question, don't just start solving. Please make your work neat. This is professional stage, oh. You need to be professional in what you do. Don't just be solving questions like all these foundation students. This is professional. Please be professional in what you are doing. So when you are done with number 1 question, come to number 2. Say either you can say calculation, determination, all those, any English you can use. Say determination of what? What are we calculating? Determination of required
return.
Required return of the portfolio. Required return of the portfolio. So you now come here now. You say using CAPM formula. So using CAPM. The CAPM now, which is equals to what? Your cost of equity equals to your RF plus your beta
RF minus RN
plus beta Sister Law. I got
ROM minus ROF.
as a symbol. Can I write it like this? Is it correct?
RP,
Is
that's
it
the
correct?
turn on portfolio.
It's wrong. RM.
Yes, sir, it's correct.
RM
So this is not correct.
minus
So this is,
R.
hold on.
Risk premium is correct.
So what you're saying that this I would say is not correct.
If the P is for
Premium now.
premium, is correct.
Risk premium is correct.
It's correct. It's correct. This premium is correct.
Thank you.
It's
Thank
correct.
you. I just wanted to be sure that you people understand what it is. Because in some books, you can see it as RP. The RP simply means your RM minus your RF gives you your risk premium. So it can just be risk premium and they write there. So I just want to be sure you guys understand why that is there. Anyways, let's continue. So yeah. So you say KE on board yourself. So you say KE now equals to what's our risk free in the question? Yeah.
8%, sir.
Multiple 8 plus our beta is 1.12. What's our RM minus RM? What's our RM? Our RM is what?
14 minus 8.
So it's
That's
14 minus 8. So what's my cost of equity? What's my cost of equity?
14.72. 14.72.
14. Why am I hearing 15? 15.72%. 14.72%. But don't forget, what you're asked to calculate is return. So now, it's not. Don't necessarily leave it in percentage. Do you understand? Don't necessarily leave it in percentage because just calculate the total return in monetary term. That's what I'm saying. This is in percentage. This is in percentage. What I'm saying, calculate in monetary term. Calculate in monetary term. So if you want to calculate it in monetary term, what do you do now? So you say this is your cost of equity. You now multiply by the total number of what? By total number of shares.
Yes.
By total number of shares.
Mm.
So you now say required return is equals to, so you say number of shares. So what's the total number of shares multiplied by your cost of equity? What's the number of shares? 15,000 plus 18,000 plus 10 plus 12 plus 20.
$75,000.
Sorry. What number of shares now? Sorry. Market value. You have multiplied them by the market skinny now.
126,100.
We have multiplied it by the number we use. We cannot use number of shares again because shares is just, how would I say it? Shares is just a unit. We're trying to calculate this into monetary term now. We want to calculate it to naira. But shares is not in naira now. 1,000 shares, 2,000 shares, 3,000 shares, they are in units. Until you multiply it by the market value before you get the total in monetary term, before you get the total market value. I hope that is clear. So this is 126, what? 126, 100, Abi?
Yes, please.
126, 100. Let me put it there. Naira now. Multiply by 14.72%. So what's my required return?
18,561.92.
18,000.
561. 61.
61.92.
2.
Like this?
Yes, sir.
Thank you very much. This is my answer. No button, easy peasy, as simple as ABC. But what you don't know, you don't know. Is this clear? I hope there's no question with this.
So, sir, anytime they ask us for a required return, we should just put it in monetary term, not in percentage only.
Yes, that's if you have value to multiply it with. Though. If you have market value of shares, but if you don't have market value of shares to multiply it with,
You leave it in percentage.
you just leave it. But most likely you have market value of shares. But if you don't have market value of shares, please leave it in percentage, please. Please, can I go to the next question? Permission to fire on.
Yes, sir.
Thank you
Carry
very
on,
much.
sir.
Let's go.
Eshe. Mr. Amos, you want to tell me something? Mr. Amos, is it a mistake?
Mistake, sir.
Thank you. Okay, so yeah, let's continue. So the next one now, that's illustration. So I said I will be doing question 4 because it's different from some of all of these ones a little bit. So you say question the illustration, then the question 4. If somebody should read the question, what's the name of the company, please?
Baremo PLC.
Bakini.
Baremo PLC. Oh.
Madam, oh yeah, the year.
Okay, Baremo PLC have been enjoying substantial net cash flow, cash inflow. The funds have been invested in a small portfolio of short-term equity investments until they are needed to meet tax, dividend payments, and to finance further capital expenditure in several months' time. Details of the portfolio, which consists of shares in 4 Nigerian listed companies, are as follows: companies, holdings, and market price. All figures as okay. Atta PLC, 60,000 shares of 1 naira each per value at the market price of 4 naira 29 kobo. EO PLC, 80,000 shares of 50 kobo each per value at the rate of 2 naira 92 kobo. Eran PLC, 100,000 shares of 25 kobo each per value at 2 naira 17 kobo. Eja PLC at 125,000 shares of 1 naira each per value at 3 naira 14 kobo. All figures in the table are assumed to be correct. The yield on treasury bills is 11% a year, and the market return is 19% a year required. On the basis of the data given, calculate the risk, that is beta, of Baremo's short-term investment portfolio relative to the market. B, recommend, giving your reasons, whether the composition of the company's short-term investment portfolio should be changed. Show relevant calculations in brackets. And C, discuss the factors that a financial manager should take into account when investing in a marketable securities.
Thank you very much, madam. Is your husband you will marry? And if you're married, is the one you married will be your husband. Thank you. So this is a question by Remove PLC. So the first question is, I assume he's saying that we should calculate, if I heard you well, I think he's saying we should calculate the beta of the portfolio. Abi, yes or
sir.
yes?
Yes, sir.
So how do we calculate beta of portfolio?
Total weight over total
Bro.
market.
Go on, answer me.
Total weight over total market.
Is the total weight divided
total
by
market value.
Market value?
Calculation of beta portfolio. So let's not do something like this. Do I need to still this one is 4. Let me just do 1 minute though. I think I can start. I think I can see this exact same table now. It still works. So the companies are what now? Madam, the companies.
Ata PLC, EO PLC.
Ata PLC, EO PLC. Madam, what is that? Madam, what is that in English?
I don't know, sir.
Ata means Pepe. Ata means pepper. Iyo means salty. Ero means meat. Eja means fish. Good. You have learned one Yoruba today. Go and hold it very well. In case if now waiting God go ask you be that. I don't tell you.
Thank you, sir.
You're welcome. Before you go say I don't do anything for you. Oh yeah, my shares. What are my shares for them? What are my number of shares for them?
Ata has 60,000 shares.
60,000 shares.
You have 80,000 shares.
80,000.
Aaron has 100,000 shares.
100,000 shares.
While Edja has 125,000 shares.
25,000. The market value per share go.
1 naira each. Okay, sorry. 4 naira 29 kobo. Market price.
I don't lost though. What are you calling for me?
For Ata PLC, please.
I'm listening now.
For EO is 50 kobo per.
Ata is what?
Ata is 1
4
naira.
naira 29 kobo.
29.
Open. The second one.
2 naira 92 kobo.
2 naira 92 kobo for 50 kobo each.
2 naira 17 kobo.
For 25 kobo each per value.
3 naira 14 kobo.
For 1 naira per value each.
Some people now, their church mind. You see all those people that have been following them from their village, we know one rest. You allow them to go and be putting 1 naira, 50 kobo, 25 kobo, 1 naira in this place. Now, is that the market value per share? Is that what they are selling it in the market? That thing now is just the value of the shares that person is buying. Go back home. The value that the person is just buying, the person's shares is just 60,000 naira per one naira, 60,000 shares. And it's 1 naira each. It's just the value of what the person is buying. But not lie, some people will still take it as their market value, even when market price is written bagada in front of them like this, that this is the market price. So not lie, they're not going to go. This way they do them, they're not going to leave them. Oh yeah, what's my market value? Oh yeah. Somebody should be doing EO.
257,400.
Which one is that?
Ata PLC.
Yeah. Just give me figures. I'm very active.
EO 233,600.
33,600. I'm even active more than people that want to do exams.
I have a question, please, sir. Please, sorry, I have a question.
Ask me. Somebody should be calling figure for me. Ask me.
The power value won't it affect the market shares?
Like. Power value is just the value of the shares now. It's not the market price. Go ahead.
Edja 392,500.
392,500.
Error 217,000.
217,000. Somebody should be doing total of this. Somebody should be calling beta for me. What's all my beta for them?
0.16.
1.16. I'm hoping somebody's already doing the total of this. So 1 point, and I'm hoping somebody's already multiplying them to give us the weight. Let's be fast. Oh yeah, 1.16.
28.
1.2. 1.2.
Yes.
The next one.
Total of market value.
0.90.
1.90.
0.90.
0.90.
Yes. Then 1.50.
1.50. So that was my total.
1
What's my total
1
market
million
value?
100 500
1,500.
1 million
100 500
100 500.
500.
What's my first weight?
69,600.
69,600. Second one.
102,400.
102,400. The third one.
98,000.
98,000.
187,500.
I'm not give us poison. I'm sure we have cooked beans somewhere.
The last one is
I thought you are multiplying it by beta.
588,750, please. The last one, Edja. Data Phantom.
5 what?
588,750.
You see that the moment I heard that my madam voice, I already knew she was cooking.
Sorry, sir.
That thing is not correct.
But the
First
answer.
one is 298,584.
Second one is 298,584.
First one.
No, the first
The
one.
first one 298,584.
298. Madam, you do us wicked though. Yeah.
299,299,08.
There's everything that is wrong.
195,300.
300.
195,300. I saw this madam for just kill all of us like this.
What would you write?
Million. 38.
Eh?
38.
Go.
1 million.
Million.
381.
Somebody's
381,642.
Hold on. There's somebody that's interfering with my a lot of people are unmuted. What's happening? Like good. I like you people. You people already like you. As I came like this, you people. Good. Oh yeah, let's go again. 1 million. Hey, is this person? 381.
642.
Code 642. Miss Comfort. I think there's a noise somehow, somewhere at your background. Maybe fan. 381 what?
381,642.
Eshe means thank you. For people that want to learn, get it. Tell now.
We know that one already.
Eshe. Yeah. No, see now, human being, I don't proud. When they say NYJ, I don't know that one. This one, you say we know it already. Now they know the help man be this. 381,642. The next one, the Sheshekushe. Okay, I'm correct. Yeah. Divided by what now? 1,100,500. This was my beta.
1.265.
1.85. Are you seeing the betas I'm getting?
1.26.
1.26.
1.26.
David.
1.26.
I have heard you, Jesus is Lord. You have corrected it. People are saying the better that me I'm getting. You don't know that I'll give you assignment. I'll be saying 5 point something as your better. I beg go. Don't let us fight. Yeah, what's the second question? The second one is recommending, giving your reasons. The composition. Okay. So now let me give you another expo. You guys should notice that all my classes have been giving you expo. It's until you hit exam up, you will notice all the sweetness of this expo. Why you need them. Let me give you another expo. See, for portfolio theory question, whenever you see, whenever you see any question like give your recommendation or recommend giving your reasons or decide or help the clinic on decide what which portfolio they should buy, then that involves you giving an advice. This is what they are trying to let you. This is what they want you to do. So now, what they particularly want you to do is, now you've calculated your beta. Now use this beta now to calculate the expected return. Sorry, use it to calculate the required return. Sorry, use this beta now. Use this beta to calculate the required return. So whatever required return you now have, you will now compare it with your expected return. Chamber, you will now calculate it with your expected returns. Once you now calculate it with your expected return, you will now compare the two together. You will now make a decision. That is just what they want you to do. So whenever they say recommend, advice, as long as it's portfolio to advise which one they should buy, they recommend this one, that one. That's what they want you to do. Use this better that you have determined. Use it to calculate the required return. Then the required people should have been giving you tricks. Maybe you should better use all those tricks in the exam. I don't want to hear a story. So B, you say determination of waiting now. Let's say determination of required return. What did I say? What did I say when you are supposed to use required return? What did I say you should do?
We should use CAPEN.
Use
Thank
cafe.
You CAPM.
you. So you now come here. You say using CAPM. C class that I said will not belong. It's almost even my time. Oh, what's our risk free? What's our risk free?
11.
11. Plus, what's our
11%.
beta? Our beta is 1.26. But no. Hold on.
Okay.
Since I'm not doing for the general, I'm doing for each of them now. I'm just hold on. What I'm doing now? So what's our RM? What's our RM? Minus
Our
RF.
RM
What's
is
our
19.
is 8.
19 minus,
Minus
19 minus
11.
8 now.
11.
I've been
19 minus 11.
I've been now. So that's 8. So you can now say equals to KE. No, let me write it on another line. I say KE equals to 11 plus beta what? Beta 8 till by. So you now come down here. You now say, so let's be bringing those companies name one by one. So that we'll be just be putting their beta. We'll just be multiplying it instead of doing one by one. The first one is what? Atta. You say Atta PLC. So that is 11 plus, what is better?
1.16.
What is better? 1.16 multiplied by what now? Multiplied by 8. Sorry. So what's this cost of equity?
20.28.
20.28%. Next, EO.
EO
EO PLC. So we say 11 plus, what is better?
1.28.
1.28. You say 8. So what is cost of equity?
21.24.
21.24. I just hope somebody is understanding what I'm doing. Next one is error. So is it error PLC? 11 plus 1 point. What is better?
0.9.
0.9. So what's my cost of equity?
13.2.
13.20. So the next one is Edger PLC. Okay. So 11 plus, what is better? What is better? What is better?
1.50.
1.50. So the cost of
23.
equity, 23.
23. Yes, sir.
That's 23%. Good. So we've determined our what now? We've determined our required return. Now, based on this question, hold on 1 minute, please. So we're supposed to determine our what now? Our required return based on this question. Okay. 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 So now, let's now come in. So let's now say required return. This is where some people might have problem because the calculation of it.
Excuse me, sir. That error is
Yes, ma'am.
18.2.
18.2.
So this is where you might need to study past questions a lot because sometimes calculation of required return can come in a lot of ways. So that is where, expected return, not required return now. Sorry. We've done required now. Expected. So as I was saying, expected return can come in different ways. One of the ways it can come is that first one that we solve. That this one now. This one way it could come. The one we want to do now is another way. This one that involves capital, that involves dividend and capital, gains. This is another one that can come in as so. So you just come here. So you see, good. You see your expected return equals to, for this particular one, equals to your dividend yield plus your what? Plus capital gains yield. So what this is saying is, for expected return, for you to determine this expected return, you have to determine the amount that your dividend will give you plus the amount that your capital, your gain on capital would also yield for you to determine this. For you to determine this expected return. So let's start. So let's say what's the name? Let's do what's the next one now? What's that first name? Atta. Let's say Atta PLC. What's Atta PLC's dividend yield?
6.10.
Yeah, 6.10. What's his capital gains yield?
13.4.
13.40. So what's the total expected return?
19.5.
19.50. I hope you guys get this thing, because it's simple. It pains me when questions like this come out and still fails it, because it's simple. So the next is EO. Your PLC. So what's the dividend yield?
3.4.
3.40.
3.40. The capital gains you didn't go
20.6.
22.6. So what's the expected return?
24.
24. So the next one is what now? Hang on, Abby. What's the dividend yield?
5.70.
5.70.
5 point what?
700.
5.70.
11.8.
11 point. 11 point what?
11.8.
17.5.
So Eja Abby.
Yes.
Yes.
3.30.
So what's the what?
3.30. 3.30 plus 19.7.
19.70.
23.
23.
Now, so now let's go to, so this is what the calculation. Now let's now go to the where we now do the calculations. Go. So here now we need a table. I can do maybe so I can do 5 by 1. Maybe that's 5 by 6. I need to increase. I'll be increasing later. Let me do 5 by 4. So I have company. I have expected return. Let's call it ER. We have required RR. We call it KE. Then we now say let's say let's just call it and just say differences. So the difference now is always your expected return. Always your expected return minus your required return. You don't forget. And this one now, this is where your recommendation now comes in. Good. So what's the name of our companies? So we have ACTA PLC. We have EO PLC. We have Eno PLC. And we have number. Then we have Eja PLC. So what's the expected return?
19. 24.
Bro.
17.5.
I know yeah. 19.5.
23.
20. Madam, I cannot hear. You're using bedroom voice for me. I cannot hear.
I say 19% for expected returns, sir.
Yeah, for the next one.
Sorry, it's 19, not 19. Okay, it's 19.5. Oh. 24.
Madam, are you sleepy already? Stay early.
17.5.
The next one.
17.5. 23.
So I required return call.
20.28.
20.28.
21.24.
21.24.
18.2. And
18.2. 23. Please listen to me here. If you have been sleeping since morning, wake up now. If you have not been, wake up now, please. This is where most students fail this thing because they don't pay attention and they read too many books. In some books we do required return minus expected return. Listen, oh, some books we do required return minus expected return. Listen to me, oh. Normally, this thing is expected return minus required return. But some books we do required return minus expected return. They will now do the opposite of what they are supposed because they know what they are doing. Let me explain to you. Now, give me the differences between them. What is this minus this?
0.78
Minus
minus
0.78.
0.78.
Minus 0.78.
2.76.
2.76.
Minus 0.7.
Minus 0.7. Last one.
And then 0.
0. Now, there's something, listen to me now. There's something called NOPU. This is what we call it, NOPU. Which is saying negative means overvalued. This N and the O, that is where the NO is coming from. Is a theory. So negative means overvalued. Are you seeing? No? Negative means overvalued. Positive means what? Undervalued. So this is what I'm saying. You know, we did the expected return minus required. Some people will not do required return minus expected return and turn this thing the other way. Are you with me? So their own negative now will now be meaning what? Undervalued. And their positive will be meaning overvalued. It's because they have turned this the other way. But normally, this is the way it's supposed to be. Usually supposed to be expected return minus your required return. And when it's expected return minus required return, that's what it's supposed to be. And when it is negative, it means it is overvalued. And when it is positive, it means what? It has been undervalued. And when it is overvalued, please, so for people that deals with stock or anything, whenever the shares is overvalued, please you sell it. Whenever it is overvalued, because now something that you bought 1,000 is now for 5,000. That means overvalued, so you sell. When it is overvalued, you buy more stock. When it is undervalued, something that is for 1,000, they're not selling it for 500. You buy. So you buy more stock. Then when it is equal to when equal, you hold. As simple as ABC. So this is a recommendation that they wanted you to recommend. When it's negative, it means undervalued and you buy more stock. Then when it is equal, you hold it. So the first one means what? So the first one, what? Is it overvalued or undervalued?
Under.
Is overvalued.
Overvalued.
I don't start. Something
Divest.
that is on the board.
Under.
Overvalued.
Is overvalued. You divest.
It's overvalued.
Overvalued.
Undervalued.
Overvalued.
Overvalued.
Hold.
Fairly priced.
Nearly overwrite it there. Fairly valued.
Fairly valued.
So you now come to your recommendation rendition now. You don't see record. This is where you know write grammar. All the English you know how to write in this life. You now come and write it. So you can now say based on the calculation and results above, comma. Please always learn to write big grammar. It's English that you know the meaning that you should write though. But write English. Let it look like you know what you are writing. Be professional in what you're writing. Don't come and be using I have come, I have go. I beg. Don't come and be using those kind of grammar for us here. Write big English. Thereafter, therefore, moreover. Let us know that this is a professional speaking. And don't come be using and no comma, nothing, and no comma, no abego. Don't know why this one is loading. And there's a face to remove it. Is that the end of is that a sign? That's the end of the class.
Oh, sorry, I thought it was my system.
On my own Google, they go. I don't know why. Let's go. So based on the calculations and the results above, it was determined that the shares of Atta and Eno PLC was overvalued, and that that more shares overvalued. It means that it can be advised that such shares should be sold because it guarantees more returns. In addition, are you not? Is your head not busting? I'm just explaining what is here. It's not as if I'm reading it for you, but is your head not busting as a marker? Are you not happy? Somebody's now somewhere writing I go that I beg. In addition, comma, the shares of your PLC, your PLC was undervalued. Meaning the shares sold below the market price, and it is advised, or it can be, or it is advised that more shares are purchased or bought to optimize returns. Furthermore, even me, I dey boast my own head. My own head is busting. You are writing all these things. Say furthermore, bam. Further, I know you will go and copy what I've written. You will do copy and paste. You know, write your own. No, it's copy and paste. You now say furthermore, the shares of furthermore, in the case of what was the last one? Edja PLC. The shares are quoted at the shares are quoted at an equal of fair price. Therefore, such securities should be held onto. If you write this one, believe me, I'm not getting anything less than the allocated mark. If this my story, if you no touch you, raise up your hand. I know I have it as. I know some people are hitting on me low key, but I know that
But please
that
go
is
back
giving
to
you
it.
job.
We are still writing.
I will share the material. Don't worry. I know some of you don't want to what's the I don't write English finish now. English don't finish on my mouth. What's that grammar I want?
Some of you are here.
Yeah, some of you will not give me my accolades now. That my oga now work you do now man you be. See grammar. Furthermore, in addition to that is how it's supposed to be sweet. So you to give me well done. No good. We will continue waiting. Now you want to write exam, no be me.
Well done, sir. Well done.
Thank you.
You are doing well.
Thank you, man. Mr. You said you see cooking. You see that it's not by knowing how to add Korean. Some of us can cook English. It's not by adding by being in the kitchen and be cooking what we don't know. Come on, cook grammar here. Thank you. Number 3, go and do it in your house. I don't try. Well, nobody can say I've not tried. Go and number 3 is theory. Go and ask Google. Go and put it on Google. I add it to your last assignment.
Please go back to the stream now.
Yeah, no. I want to take questions. That's why. And when I take questions, I like to see my screen so I can know people that are raising up their hand. But when I'm sending the material this time, so when I send the material, you definitely write from there. So, please don't forget that number 3, I already gave it as assignment for this question. Number 2, is it number 2? Number 2, no. Go and solve it. Recorded video is always on YouTube. It's on YouTube. It's on YouTube. Just go to YouTube, search Apex Professionals, ransack. You'll see this particular class there. So I'm sure you see it on YouTube. So on that note, regarding what I've done now, apart from my cooking, don't ask me questions about my cooking because I don't know where it came from. Now, so they bring up. Apart from that one, do you have any question regarding regarding anything I've just said or anything I've done in this class? Please raise up your hand. Or you don't understand one thing, please raise up your hand, please. Ask me now or never. I'm just like you by Amos. Your own hand know they go down. Mr. Amos, this man has slept raising up his hand. That's the disadvantage of online class. In physical class, can you sleep while raising up your hand? Hey. Oh, yeah. Thank you. Oh, yeah. Okay, Chuku, your question, please.
Okay, thank you very much.
Questions you Paul.
Okay, sir. Sir, please, I joined the class. I want to find out if the beta is given in the question, if the beta was given in the question, and also the market value.
Yeah,
because
the beta of the individual,
yes.
the individual securities were given in the question.
Okay, the betas were given.
Of the individual securities, were they not given? I don't forget though. But I think they were given. Yes, they were given.
They were given both the first and the second.
They were given. But just the beta of the portfolio, general portfolio that was not given to us.
Okay, sir.
And also the market price was also given.
Okay, sir. Thank you very much.
You're welcome. I've seen only men get questions like this. Oh, how do Francis? Oh, yeah. Is it Francis? How do Francis your question, please? If you have any.
Yes. Good evening, sir. I just want to throw more light on the par value and the market value of these shares. Why did we elect to use the market value other than the par value? Or what? You should throw more light, particularly on the par value. Why did we elect to use the market value? I just want to get more clarification on that. Thank you.
Were you in my bond valuation class?
Yes, sir. I joined. I missed the first class. However, I think I was part of the 2 classes of the bond valuation, sir. That was my
So if
starting
you were
point.
in the majority of the classes of the bond valuation, I'm sure you should know differences between when they say something is a market price and when it's a par value. Now, when they say something is a par value, I said that it can be par value, it can be face value, it can be book value. Let me use this my laptop that I'm using as an example. There's a book value to this laptop. That your phone, there's a book value to it. That is the normal price that it should be. That is the price that it is coming. But that is not the price that they will sell it in the market now. That is not the price that is not going to be the market price. Market price most times is always higher than the par value. Because par value is just the nominal value, the face value. That okay, on a normal day, all things being equal, no addition of anything. This is the value of this item. For market price is okay now. I want to make profit. Now, this is the amount I'm selling it. I'm selling that particular item. And in this question, what we are trying to determine is market value, total market value. Total market value. Now, let me give you an example. You're selling marker. I don't know why I like to use marker as an example. You're selling marker. Then that marker now, you have white marker, red marker, yellow marker. Now, for the white marker, the par value of the yellow marker is 1,000 naira. That is the normal value, all things being equal. Market price is now 1,500. That's 1,015. For the other marker, the black marker, 2,025. For the last marker, 3,035. You now want to calculate the total market value of what you have of your total stock. Total market value of your total stock. Which of the values will you use? I'm asking you, Mr. Francis. Mr. Francis, are you still there?
Yes, I'm here, sir. The market value. I just
use.
Okay.
You use the market price now to determine market value.
Yes, you will use.
You use the market price to determine market value. It is if you want to determine maybe how would I say it now? Maybe the total, now. No, don't let me go deep into that one. I want to give you one analogy where no go make sense, but you see that 1 naira each per value, yeah? In some places they can multiply it and say, okay, this shares now the total par value is 60,000 naira. I'm talking about the first one, the one for I think is ATA. It's 60,000 shares, 1 naira each par value. So the value of that shares is 60,000 naira. Abi? Yes, and that's 60,000 shares multiplied by 1 naira.
Yes.
So that is the total par value of that shares. But when we multiply it, that's not the market value that they sold it. Par value is different from market price.
I'm trying to look at it from the point of appreciation. Could it be that it's appreciated over time, that the current market price is now 1 point? I'm trying to see it. Maybe they bought it and now if they are to sell it, this is their current price. But this is more like an investment opportunity. They are trying to evaluate the investment without really buying it. So I'm confused.
Wait first. What do you mean evaluate investment and they are not really buying it?
Like the portfolio is just to look at the
portfolio theory is
combination.
you are not looking at them. Portfolio theory is somebody's investment now.
Okay.
That's
All right.
if we're in the first class. Portfolio is somebody's investment. You're just trying to determine the possible returns. Like this one we did. Some is shares, stocks. I explained in the first class. Is a whole lot of somebody's investment. We call it portfolio theory. So somebody's investment, they are all in the portfolio.
No, it's
So it's
because
not
of the nature, the structure of the question. You could see that they are assessing because of tax, when they are assessing to invest. It's because of the structure of the question that I'm trying to see it from the angle that they are evaluating the investment.
the question is giving you other companies because you are asked to calculate majorly expected return. That's why they are other companies. They're not other investments, because you are asked to calculate expected return. And you would need, and I've told you before, that expected return is just anticipated return. So you might need values of some of the things beside you to actually, there's this probability now to determine that anticipated return. But whenever you ask to calculate, what we are calculating is even market value per share. It's not a concern market value per share with par value per share, please. It's market value per use.
It's all right. Thank you very much.
Thank you, sir. Sorry, let me check. Mr. Patrick, please. Your time has gone.
Okay, sir. Good evening, sir.
Miss Patrick, good evening.
Okay, please. My own is a request. Because
Okay.
most times you don't really have time to mark our assignments. Could you please be helping us to tell us where the assignment is coming from so that we can as well confirm? After solving, just confirm if we are correct or not. Like if they are from Pachanda, could you please help us tell us the year?
How would I tell you? Like I would just announce it.
No, now as in by the question side, you could as well state.
If I put it there, why is it now an assignment?
To those people that wants to read, they will actually solve it, then confirm if they are correct or not.
No, I know they do that one.
But you don't always have time to mark for everybody, and you don't have time to do it in the class. That's the problem.
That you people will go and take answer at the back. I know do. Sorry. But most times I honestly check assignment. I try to the one I've said it before. People should try. Get one assignment wrong, or if there's assignments are not, I used to come back here and solve it. The ones I noticed that you guys did not do correctly, or I think there was one I gave on bond valuation. That one I had 1 plus r raised to power kinikon. When I noticed that the students, everybody were cooking beans for me, I came to class and I solved it. The ones I don't solve, believe me, I've checked most people's assignments and I've seen that you people got it correct. There was one assignment, madam, you don't know me, I'm following this class. There was one assignment I gave that I thought people were not going to get when we're doing convertible bond, that I gave the formula here in class. I told you guys, just lay your hands on it. I would come and solve it in class. But when I saw people that submitted, everybody that submitted actually got it correct. That's why I did not bother to solve it. So I just assumed that for this number of people that submitted to actually get it right, it means it's actually understandable. The assignment I don't check majorly is theory, because I know it's Google you went to ask. Why would I be marking something you won't check on Google?
It's actually that one of the bond question. That's one I actually wanted to know the solution.
I actually tried to check most of the bond. If I did not check your bond valuation question, two things: either you submitted late, or you submitted to my or submitted to my normal phone number, which I said you should not submit to my other phone number. That is the only two. But if you submitted early, believe me, I'm sure I would have checked it. And the follow-up, don't worry, you pass. I'll be doing my assignment. That's the cocoa. Just be doing. When I check it out, I've corrected people here now. I don't know if any of people have corrected. Okay, what did you do here? Why did you do it? Go and redo it. I'm sure I've given those kind of comments to your assignment. So don't worry, madam. I'm following up. It's just theory. You don't expect me to mark theory questions. Like this one theory now, I will not look at it.
No, not theory. Okay, sir. Thank you.
You're welcome. Yeah, Mr. Joshua. We time has gone.
Okay, please, my question is a little bit off from the lecture of today, because I am okay with the lecture of today, but this is my first time of joining this class, and it's very, very interesting. I just want to ask, the previous lectures, like now you have mentioned bond, campaign, and other lectures like that, can I have the material? Can we get the material? Those of us that have not joined at the beginning of the class. Can we get the materials, please?
The problem is the material. Okay, this is what I would do concerning the material, but I need you guys to be very, very professional. I want to do something because there's no way I'm looking for those materials one by one. I'm too tired for that. But this is what I would do. I would open all the group chat. I just need you guys to be very professional. I open all the group chat this night. So the moment I send the solution to the group, I open all the group chat. Please, somebody, just one person that has all the materials that has been sent, just in your group, just resend them. And if you've seen that one person has sent, please don't bother to send again. I beg. So that we don't, because we are locking the group so that we don't pile up messages, so that important information can be sent. You get? So I'll open all the group chat just for this night. Please, somebody should just send all the materials that either from my class or not from my class, all the materials that have been sent so far. You can check your documents on the group chat. I'm sure as long as you join from the beginning of the diet, I'm sure if you check your document, you see all the materials that have been sent. So you can just take all of them and resend back. So I will do that immediately. I send the solution so that people can have access. But if you are waiting for me, it will be till mid-March. I think we should do it like that. I think that works, Abby.
Okay.
Thank you very much, sir.
Thank you, sir.
Mr. Sonny, please your question, please. Abi Sumi Kitan, sorry. Please your question, real quick.
Okay, my question is the difference between the expected return minus required return, can it also be called alpha value?
She like me. Thank you. I like where you carry me to. It's actually called alpha value. That's the normal that's what everybody called it. But let me go at alpha value. But I wrote differences so that it's clearer to people in class. You know that it's different. Let me tell you something. This is why I used to feel myself here, because it's not easy. When most lecturers teach in class, you have about 10, 15, 20 students. It's easier to call a value, it's easier to call a terminology for them and they understand it. But it's more difficult for me that I'm here with 100 online students. I'm not even seeing their reaction. Maybe they understand the terminology or not. If I'm seeing that my students' reaction, okay, they don't understand, I can explain. So that's why I always try to use the easier words, so that if there are differences in the exam, it's not English class. Nobody go hold you. That's why I would, but it's also called alpha value. So in some situations where they ask you to calculate, let me go and put it in bracket, alpha value. In situations where they ask you to calculate alpha value, no, say I not teach you. Thank you.
Okay, welcome. Okay.
Better
and then I wanted to say, what's it called? I wanted to say you didn't check I sent one question to your bond valuation, but you said your week was very busy this week. Maybe I will send the question so that you can let me check it.
Yeah.
Should I?
Yeah. Yeah. You should buy me Montina and make. You know, yeah. I'm short on blood. please send the question. I'll look at it.
Okay, so thanks, sir.
You're welcome. Oh yeah. That looks cool. I go Collins. Oh yeah. I think that's the last question I'm taking. I don't tire. Okay, I think that was a mistake. Mr. Joshua. Oh. Mr. Collins, I can hear you. Is that a mistake? Or you want to tell me something? Oh yeah. Don't tell me anything again. This is your sound, Seth. It's not encouraging.
Can you hear me now?
It's better now.
Money, me do. I really appreciate, like, for the first time I'm understanding something in this SFN. It's really been giving me a worry and a sleepless night. So,
you don't understand bond valuation.
If you can send us those, if you can do the classes, so that people can send off those their all of those materials like you said. I think that would be very, very appreciative too.
Do that. Is this your first time in my class? But I've seen you before now.
That I don't. This is my first time of following you like the latter.
Oh, okay. You didn't follow the bond valuation from beginning.
I didn't follow the bond valuation from the beginning. It was just one class like that, and I just meet up, so I couldn't really pick up so much.
Oh, no problem. So my
But
advice to people like that is just go to
very like
no problem. Just do like this. If you can spare like, let me say, if you can spare 2,000. Now data is already expensive, but if you can spare like 2,500, just do one particular, maybe 5 gig or 6 gig. Just go to YouTube. That don't be doing streaming. Go and download so that you can even be watching them without data. So go and download the bond valuation. I think bond valuation is about 3 classes, and portfolio theory is about 2. I think those are the 2 calculations we've done. So download all this and then watch from beginning. I'm sure if you watch our bond valuation class from beginning, people even would, I'm sure you would understand it. So people have, some of you have free internet in your offices now. You can even use this one. Just download. Don't be doing you want to be streaming. Just download. So once you download, you can always go back to listen to my voice. The way people used to listen to my voice, my ear used to tear at home. My ear used to tear, but I don't mind. People should be listening to it. Make I be happy. These people should be passing, please. So go and watch these questions and all. Please, somebody should drop my other number in the comment section, in the chat section. I know you people should know my number offhand now. So please, you should drop my number in the chat box so that people can drop their assignment. Please don't send to the number I used to send material. That one is my personal number. Let me have my personal life to myself too. Eshe. But anyways, that being said, Miss Oliemisi, thank you. Please, what do you want to tell me? We are. I won't go sleep. Yeah. Okay, I guess that was a mistake. Anyways, on that note, please let me give you a piece of advice. Before my next class, all these ones we have done, please practice questions on them. Make sure your answers are solid on them. Like I said, I will try as much as possible to look for one more question to add to this your assignment for you so that you have to practice yourself on. But just on your own, go to the past questions. You have past question guide. Go and look for past questions and lay your hands on. Why am I giving you this advice? You see, from next week, my classes will start. We know we are still playing like this. And if you don't know, go and know. And from next week, please don't miss my classes. Because that is where we'll start doing the main things. We start doing the investment appraisals. We start doing the lot. That's when we start closing classes by 12. Sometimes after 12. Last night, I think we did to 1. So you know we are in serious business. Last night we did to 1 from 9. So that is when we'll starting serious business. So from next week, Monday, please do not miss my class. We are starting from the introduction. Introduction is everything. You guys know, for people that have been in my class from beginning, introduction, because I will not do the introduction twice. Introduction is the cocoa. That's why I will explain some of the things and some of the things you should be expecting in the question. So make sure these ones we've done, make sure they are staying in your hand already before you come and pie those ones to it. So bond valuation, I think you guys have started cost of capital. I'll be using cost of capital in the next part I'm going to. So please go and learn those ones also. Bond valuation, portfolio theory, make sure they stay in your hand very well before we move to the next one. Mr. Benjamin, please, what do you want to tell me?
Yeah, thank you very much, sir. Yeah, what I want to say is not actually a question, but more like an appeal, or rather a suggestion. I don't know if the timing for this SFM could be changed to like 7 p.m. because it stretches to around 12 or even after 11, and some of us go to work very early the next morning. So I don't know, it's just a suggestion anyways, if maybe the management team could see to it. I don't know.
7
Although I
p.m.
know it might inconvenience you somehow, but
7 p.m.
maybe
I never even
just strike a balance.
7
Any
p.m.
of us will be on the road.
We have a taxation by 7 o'clock.
It's okay. It's okay. Yeah, I mean, I'm not even taking to the advice. It's just a suggestion, but I'm not taking to because 7 p.m. even me, I never reach house. I used to reach house almost 8 after. That's when I start looking at what I want to do. All this question bank thing I put all those questions there in less than 20 minutes after I got home. I never even come out shirt. I just dropped my bag before I now dropped my bag, then went to remove my shirt and showered. Then that's why the class took longer than 9. All those people I went to shower before coming back. So that I never even reach house. So the thing is, if the class is shifted to 7, I'll be missing most of my classes, which I don't want to miss. So you pay me like this. You should be extending to 12:1. We'll still wake up early in the morning and go on. Now you want charter now. It's not easy to be a chartered accountant. Think it's being so you put ACA in your name. You want to get it by coming to class 7 p.m. Like. Thank you. Thank you very much. When people qualify now, you will be writing your name anywhere. Some of you on group chat, you change your name, you change it to ACA. You put ACA. People are proud.
By God's grace. By God's grace.
No problem. So
thank you very much, sir.
You're welcome. Thank you guys very much for listening to me. Your Wednesday classes are shaking for now, but we'll try as much as possible to see if something could be done to it. We'll see as much as possible if something could be done to it. Maybe we'll start up on Wednesday, but anything that we've done, we'll definitely let you know. Either somebody comes up, cover for the person, or we'll try to even move the date, anyone that works. But we'll definitely announce. Anyways, thank you guys very much for listening to me. You guys are amazing. And
thank you.
Take good care of yourself. Have a wonderful week, and I will see you next week, Monday.
Thank you, sir.
Remain blessed, sir. Thank you for your sacrifice.
Somebody have dropped your phone number in our group 2, please, for the assignment.
Sir, please call your name again.
You call my name.
You are missing something now. Please call your name again.
You call my name.
Yes, sir.
What's your plan, madam?
No plan. So I like it when you call that name. After calling you, that says ACA.
My name is Lamon Olanshile Omogbala.
Thank you.
That
Thank
is
you. Good night.
They give you joy.
Thank you.